Hey, welcome back. Following a series of bad reports and negative news, Nokia is now down to some of the lowest levels in recent history. Last year, the company had a free cash flow of 0.8 billion euros, but 1.7 billion of this was made in Q4 for an annual conversion rate of around 34%. Still, for a year with a massive decline, especially in North America, this is not bad for a 19 billion euro market cap. They say that Q1 and maybe a bit of Q2 should keep being relatively bad, but they see trends of improvements in the near future. Still, the company increased the dividend to 0.13 euros and approved another 600 million buyback program over 2 years again, so around a 4% dividend plus about 1.7% per year in buybacks. Following the Q4 report, they offered a relatively good guidance for this year, as well as more data and an update about the previous long-term targets. This year, they expect to make around 2.3 to 2.9 billion euros in profit with a free cash flow conversion rate of 30 to 60%. That's around 0.7 to 1.74 billion, so a ratio between 27 to 10, which is not the cheapest, but the longer-term targets offer the real opportunity. Even with zero growth in net sales, and keep in mind that this was a bad year, plus the minimum profit margin, that should be 2.9 billion in profits. The free cash flow in this case would reach 1.59 to 2.45 billion, meaning a ratio of 11 to 7, and this is with zero growth. Nokia still has a net cash position of 4.3 billion euros, which allows them to have a lot of flexibility. The company has current assets of 18 billion, of which around 6.2 billion is in cash. Everything is in euros, by the way. Meanwhile, Nokia's total liabilities sum up to around 19 billion, so this is a very financially healthy company, even after a relatively bad year. One opportunity I want to briefly mention is what we can call technological advancements. I mean, 4G being replaced by 5G and then that by 6G and so on represent big opportunities for Nokia. An advantage is that their clients, if we think about telecom providers, basically have to make these upgrades if they want to remain competitive. Combine that with another positive, which is the fact that there is not that much competition since Huawei and ZTE are banned in some of the key markets. There are smaller companies that provide this kind of technologies, but Huawei, Nokia and Ericsson are by far the dominant players in their main industries. A negative, let's call it that way, is the fact that Nokia is ultimately going to reflect the economy. If the clients have a bad time and like today they are not in an environment where they have a lot of money available to invest, Nokia's revenue is going to suffer. In a way, you can call Nokia and Ericsson and the whole industry cyclical since they follow the economic cycle, as we can see today. However, when a new investing cycle inevitably begins, we know that many of their clients have very deep pockets, especially if we look at Verizon and AT&T, for example. Now, Nokia is not really the only company that has issues in the industry. We've seen an almost identical drop in revenue for Ericsson as well, so this is more of a temporary issue in the industry caused by the interest rates rather than a company-specific problem. But, the market doesn't really think 1-2 years in advance, which generates opportunities. Anyway, many studies expect the 5G infrastructure market to grow at a compound annual growth rate of around 60% during this decade. However, obviously, none of these studies could have expected the pandemic and then the high interest rates, both of which resulted in a delay in this adoption. But as I said earlier, this, for many companies around the globe, becomes a mandatory upgrade in time. If you think about it, it makes sense from the telecom provider's point of view, for example. These companies usually have a ton of debt, so instead of being among the first to do it and having to deal with that massive interest on top of what you already have, you can wait a couple of years and pay like half of that interest. Combine that with the low competition and you can see why I believe there is so much potential. Not only that, but in a previous report, Nokia announced that they want to reduce the number of employees from around 86,000 today to 72 to 77,000 by 2026. As a result, combined with other cost reductions, they should save around 1 billion per year, meaning that even in a bad scenario like today, they wouldn't lose too much money. Even when comparing them to giants like Cisco, who's like 10 times bigger than Nokia, Nokia spends more than half of what Cisco spends on R&D. If they wanted to impress the market, they could have reduced it in like half since the new CEO came and the bottom line would have been great. Instead, and this is something from almost a year ago that I think went kind of under the radar, they cut the net cash target from 30% of net sales to make sure they keep focusing on the R&D. Not only that, but if this results in a free cash flow improvement in 2024 as they expect, this can lead to a small sub-focus on mergers and acquisitions, plus higher dividends and buybacks. I think I said this before, but this is, and I'm talking in general, not only about Nokia, why it's so important to look at the bigger picture, because if you just read the headlines, you miss out on so much useful information. Out of everything I just said, do you remember seeing any other headlines in the past year other than Nokia planning to fire like 10,000 employees or having a negative free cash flow or the issues in demand? If you don't look for these things yourself, you end up seeing the results and you probably have to pay a premium for them by that time. Now combine the cost savings, the reduction in net cash target, plus everything that I said earlier with lower interest rates, and you are looking at a potentially very profitable dividend payer in 2, 3, maybe 4 years depending on the Fed. Plus the very good financials on top. Now that they lost the AT&T contract, the targets are going to take a bit more than initially expected, but I still remain confident in the company's long-term potential. When the Fed is finally going to cut the rates, Nokia should also see a recovery since their clients would benefit a lot from that and maybe a new investing cycle could begin. As for valuation, let's begin with the company's outlook, and to be more conservative from the start, I'll use the net sales from last year, which again was not the best. In a bad scenario, let's say there is no growth in net sales, they get a 13% margin, which is the minimum they expect, and they convert the minimum 55% into free cash flows. That's a cash flow of 1.59 billion, and if the market is trading them at a ratio of 10, that's a market cap of 15.9 billion. That would be a stock price of around 2.85 euros, so not very far from the current price. With dividends and buybacks, you probably break even. In a second scenario, let's assume they reach the same level of sales as 2 years ago, meaning around 25 billion for an exactly 4% growth rate. If they have a margin of 14%, that's a profit of 3.5 billion, and if they convert 60% of that into free cash flows, that's 2.1 billion. If the market is trading them at 15 times that amount, that's a market cap of 31.5 billion for a stock price of roughly 5.66 and a profit of around 80%. That's around a 2x in 3 years with the dividends and buybacks. Now, if they grow at 8% per year over the next 3 years, that's 28 billion in net sales. For a margin of, again, 14%, that's 3.92 billion. If they convert, let's say, 75% into free cash flows, that's 2.94 billion. For a ratio of 20, assuming that the market would recognize what Nokia has achieved, that's a market cap of 58.8 billion and a stock price of 10.57. With dividends and buybacks, that's around a 250% profit. But you know, these 2026 targets are more like a medium-term milestone today rather than actually long-term. So let's say in maybe 5 years they stabilize, the business is finally optimized, and they become a dividend cash cow after a lot of growth. I'd say that for me this is a good price to buy considering the company's potential, and I'll see if I want to add a bit more in the near future. I honestly don't care if the stock goes up or down in the short term, because I mean this for the very long term. Most of you probably don't know this, but I started buying Nokia a couple of years before the GameStop thing happened, so around the time I knew who the new CEO is going to be. And look, I had plenty of time to sell this for a quick 2x or even more, but I'm not selling this for a 2x. I think they have a much better potential in the long term. At the end of the day, Nokia still has some of the best financials in the industry, and even if the whole sector is affected today, I believe in the company's long-term potential. There is a ton of potential to grow, and the new management is, in my opinion, steering the company in a very good direction, but this is something that takes time. To finish, I want to show you the discrepancy between what the company does and what the market talks about. While the market keeps focusing on these temporary issues happening today, Nokia is literally building the future. As always, what I cover in my videos shouldn't be enough for you to make any investment decision, so please do your own research before investing in anything. If you want to see more videos like this one, please leave a like and even a comment to help me out, and make sure to subscribe. Thank you for watching, and I'll see you next time.